Your roadmap to the latest in auto. Welcome to Highway Herald, where fuel strategy meets global power shifts. In 2025, Canada shocked the energy world by rerouting oil exports from the US to Asia. Driven by tariffs, stalled pipelines, and China's booming demand, this pivot isn't just economic, it's geopolitical. With the Trans Mountain expansion in full throttle, Canada is reshaping alliances, redrawing trade routes, and forcing the US to rethink its energy dominance. Buckle up, this isn't just a supply shift. It's a high-stakes race for global influence. Trans Mountain's new direction, Revs toward Asia. For decades, Canadian crude flowed effortlessly into US refineries, a reliable rhythm fueling North America's energy core. But in May 2024, that pattern downshifted. The fully activated Trans Mountain expansion added 590,000 barrels per day, sending Alberta's oil sands westward to the Pacific, and from there, straight to Asia. This isn't just pipeline infrastructure, it's a geopolitical detour. By March 2025, China alone had imported 7.3 million barrels via Vancouver. That's a stunning 90% plunge in Chinese imports from the US, dropping from 29 million barrels per month in 2023 to just 3 million now. Why the sudden redirection? Canada's fed up. After years of US tariff hikes, price disputes, and the Keystone XL cancellation, Ottawa hit the ignition on its own terms. TMX is a billion-dollar bypass, proving proximity doesn't equal loyalty. Now TMX isn't just a pipeline, it's a declaration. Canada is done being the default option. And Asian nations? They're not just buying oil, they're buying consistency in an unstable energy world. The US, caught idling, must now rewire its assumptions. This isn't a deal, it's a recalibration of power. And speaking of recalibration, China wasted no time adjusting its own strategy. China's fuel play, securing power, one barrel at a time. China didn't just identify an opening, it accelerated through it. As tensions with Washington escalated and tariffs flew both ways, Chinese refiners saw Canadian crude as a clean, stable alternative. In a savvy move, China used this opening to secure energy outside of political crossfire, a Grand Prix-worthy maneuver in global trade. Canada's heavy, sulfur-rich oil is a perfect match for China's advanced refineries, which previously relied on higher-risk suppliers like Iraq and Saudi Arabia. But as geopolitical instability and price volatility grew, Beijing shifted gears. Canadian oil offered a rare combination: consistency, affordability, and no diplomatic baggage. The numbers back it up. Canadian oil imports to China have reached record levels, and long-term deals are locking in. China is now on track to make Canada its third-largest oil source, just behind Russia and Saudi Arabia. This isn't just a supply deal, it's a strategic play. Canada helps China bypass choke points like the Strait of Hormuz and sidestep sanctions-prone nations. The US, once the dominant player in this arena, now watches from the sidelines as a powerful new energy alliance takes shape across the Pacific. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now, with China making bold moves, how is the US responding to the shifting landscape? America's energy reality check. For US refiners, 2025 has delivered a harsh reality check. Canada, once the backbone of America's imported oil supply, providing around 4.2 million barrels per day, has hit the brakes. Forecasts now suggest that figure could dip below 3.5 million barrels, tightening supply and sending gas prices soaring past $4 in many states. The challenge? American refineries were engineered for Canada's heavier crude. Domestic shale is too light, and alternatives from Venezuela or the Middle East come with political headaches or higher costs. The result? Production slowdowns, price hikes, and mounting concern from both industry and consumers. But this disruption isn't happening in a vacuum. It's the blowback from America's own policies. Tariffs, canceled pipelines like Keystone XL, and combative trade stances have pushed Canada to look elsewhere. And now, Ottawa is taking the wheel. No longer content to play sidekick, Canada is treating energy as a strategic asset, not just a shared convenience. Washington, meanwhile, is scrambling to course correct, exploring tariff rollbacks and ramping up drilling. But every barrel rerouted to Asia weakens US influence, leaving America chasing after leverage it once took for granted. As America's grip weakens, a new regional power bloc is quietly gaining speed. Asia's expanding fuel alliance gains traction. China may be leading the charge, but India and Japan are accelerating fast in the race for Canadian crude, and Canada is embracing the momentum. Indian refiners are negotiating to import up to 200,000 barrels per day, while Japan is pursuing long-term deals for around 150,000 barrels daily. Together, these three Asian powerhouses are forming a formidable energy bloc capable of redirecting over $1 trillion in global oil trade and challenging the US-led, dollar-dominated oil pricing model. For Canada, this pivot means liberation from its historic dependence on US refineries. With new buyers in Asia, Ottawa gains pricing power, market flexibility, and geopolitical autonomy. This isn't just a market tweak, it's a strategic overhaul of Canada's energy future. The infrastructure is keeping pace. Pacific tanker traffic is surging, Vancouver's port is expanding, and new eastward pipeline plans are in the works. Canadian oil has officially gone global, and the Pacific is its new superhighway. As the Asian alliance gains traction, one fact is undeniable. Canada is no longer just exporting crude. It's exporting influence, rewriting trade routes, and reclaiming control of its energy destiny. But while Canada is winning deals abroad, the battle at home is heating up. Green resistance and the cost of bold moves. Canada's global energy pivot may be gaining traction abroad, but at home, it's running into resistance. The Trans Mountain expansion has sparked major backlash from environmental groups and Indigenous communities, leading to widespread protests across British Columbia and Alberta in 2024 and 2025. Legal battles have already delayed future projects, and public opinion is increasingly fractured. Critics argue that Canada's push for oil exports contradicts its climate commitments, especially as the world accelerates toward renewables. With EVs now making up 20% of global car sales, and China targeting 50% adoption by 2030, many fear oil demand could shrink faster than expected, leaving Canada with costly, stranded infrastructure. Compounding the challenge are rising tensions with the US lawmakers in Washington are considering sanctions and regulatory crackdowns on Canadian oil firms, which could tighten financing and hurt export potential. Meanwhile, Canada's deepening relationship with China is drawing concern from Western allies, highlighting the geopolitical risks of this pivot. With clean energy technologies surging, some fear Canada is placing a high-stakes bet on a market already shifting. The strategy may be bold, but the consequences could be lasting. So how will this energy gamble play out in the long run? Verdict: Canada's energy shakeup. Genius strategy or gamble on borrowed time? Canada's energy pivot is shaking up the global oil game, with the Trans Mountain expansion now fueling exports to Asia and demand from China, India, and Japan rising fast. Ottawa is gunning for Pacific oil dominance. But the path isn't smooth. Environmental protests are growing at home, Western alliances are under strain, and the clean energy transition is accelerating. Canada's gamble? Profit now, adapt later. If oil demand holds, this could be a masterstroke. But if the EV surge wins the race, Canada may be stuck with outdated infrastructure. What do you think? Is this a smart realignment or a risky overtake? Will the Asia alliance endure or hit turbulence? Would you ease off the gas or push harder on the throttle? If you found this video insightful, be sure to subscribe to Highway Herald for the latest vehicle updates and in-depth analyses. Your support helps us bring you the best in automotive content. Please leave a comment below to start a conversation. Thanks for watching and see you next time. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.